Hello, I'm Tai Hui, the Chief Market Strategist for Asia Pacific at J.P.Morgan Asset Management, and welcome to the first of 3 videos on the market outlook for 2021. Now, 2020 has been an exceptional year due to the COVID-19 pandemic, which prompted central banks to act aggressively. As we look forward to 2021, we're not only hoping for a better year with some normality returning to our lives, we're also thinking hard on the right investment advice that would encapsulate such an unusual economic and policy environment. In our 2021 year ahead market outlook, we try to address several questions that investors are asking. Now, I believe that the pandemic is still pivotal to growth, policies, and sector performance, or GPS for short. In this video, we will address the economic and policy outlook for next year. In the next 2 videos, we will look at asset allocation, equities, and fixed income. Now, on the economic outlook, the pandemic continues to be the key influence on economic growth next year. Being able to limit its impact will be key to a speedier recovery. China's ability to deal with the outbreak has facilitated businesses and consumers to return to normality, and we expect China to continue to lead the global economic recovery next year. For the US and Europe, the prospects of economic recovery should be improved if their governments can strike a better balance between controlling the pandemic and maintaining economic momentum. Overall, we expect the global economy to gradually recover over the next 12 months. Vaccine development and distribution, or accurate and efficient tests, could help to turbo boost recovery. However, this may not impact the real economy until the second half at the earliest, considering the amount of time that's needed to manufacture and distribute vaccines. Moreover, not every economy will have the same access to vaccines in the earlier days. This means the pace of global recovery is likely to be uneven. Now, governments should continue to support their economies with spending and tax relief, but the scale of this fiscal stimulus could be small to slow down the rise in government debt. In the US, a potentially divided Congress means that any fiscal stimulus could be modest. A strong recovery due to better control of the pandemic could also reduce the need for more aggressive policies. We don't see inflation to be a concern for 2021, and this would allow central banks around the world to maintain loose monetary policy, including zero interest rates and quantitative easing. A gradual recovery would imply a rise in bond yields, but central banks will be careful to manage its rise so that the borrowing costs for governments and companies would not increase too quickly. A global recovery and a low US dollar interest rates will also imply a weaker US dollar. Now, this could benefit Asian and emerging markets equities and fixed income. We'll discuss more on asset allocation in the next video. Now, if you want to get the full version of our 2021 year ahead with charts from our popular Guide to the Markets Asia, please reach out to your J.P.Morgan Asset Management client advisor. See you in our next video, which will discuss more on asset allocation and equities.